Let's bring in Larry Kudlow, our good friend and the host of Kudlow on Fox Business. Larry, I was watching you on earlier. I know that you feel that the corner is about to be turned. I just want to play this flashback from February the 2nd, right after, a couple weeks after President Trump took office. And here's what he said about the tariffs and their impact on the economy. Watch.
We may have short-term a little pain, and people understand that. But long-term, the United States has been ripped off by virtually every country in the world.
I mean, we know that inflation has gone up 1.86% since President Trump took office. And you compare that to the Biden years when it was up 21.5%. So it is edging in the right direction. What do you see that looks good and what concerns you?
I think this whole story is really good and probably better than people thought. By the way, if you want the tariff issue, where everyone went crazy, including Jay Powell at the Fed, tariffs are going to cause inflation, tariffs are going to cause inflation. Nothing of the sort occurred. And I just wanted to read you from today's CPI report. We look at goods prices, which is the most tariffable, and not services, but goods, right? Goods prices, the last 12 months, 1.8%. If you take out food and energy, it's 1.4%. I mean, there's not a problem there. And the other thing overall, look at last 3 months, okay? CPI is up 2.1. Core CPI is up 1.6%, which means in effect that, you know, families who are worried about take-home pay, that was Ronald Reagan's old line, and Mr. Trump has adopted it. I use it all the time. Take-home pay, you know, wages less inflation, could be 3 to 4 percentage points. That's unbelievable. And he said last night, I just want to read this.
Higher than last year?
Yes.
Okay,
yes.
I'm trying to clarify. Yeah.
I mean, the wage rates right now are running 4 to 5%, really closer to 5% from the employment report we just got. So your inflation is running at slightly above 1. That's all it is, okay? So that leaves you a big gap, right? A take-home pay, real after-tax income. That's what people want. That's kitchen table stuff. So last night, Trump says we're poised for an economic boom, the likes of which the world has never seen. We're the hottest country anywhere in the world. I happen to agree with that, and I think he should stay on that and really campaign on it for the midterms. You could grow next year at 5% GDP.
I heard you say that.
With
so
something
you
like
see 5% growth in Q1?
1.5% inflation. And for the year as a whole. I mean, the quarters will jump around. Look, here's another one. One big, beautiful bill, deregulated energy, okay? It's just so important. $100 price of barrel of oil at the beginning of Trump's term. It's now 55, 56. So gasoline prices are coming down. That's going to be reflected in a lower inflation report. But remember, oil permeates the entire economy.
Absolutely.
Okay? My glasses, petroleum related.
Everything.
If I go to the dentist, petroleum related. I mean, there's a couple of hundred items that you do. So that hasn't even hit yet. This is going to bring down inflation even more. It's going to bring up real wages even more.
So tell me about, you know, the sentiment numbers are still a little boggy. So why do you think, and we look at the polling, so why do you think there's that conflict where people feel, we know housing is sticky in terms of inflation and in terms of the cost of housing in the country. So do you think all of that starts to go away when people feel this big, beautiful bill in the first quarter?
Yeah, I do. I mean, I don't trust these sentiment numbers. Like the Michigan survey, Democrats are always against Trump and Republicans. They're very poorly constructed. Sentiment doesn't mean actual. That's all I'm saying. It's like a bad poll, okay? Look at mortgage rates probably come down. All interest rates can fall because inflation is down. I mean, just whatever the Fed does, but the Fed will ease too. So mortgage rates will probably move to, I don't know, they're slightly above 6. They'll probably move to 5.5%, more or less, okay? 5.5%. A lot of experts on this point believe that people will sell. They're sitting on their home.
Right.
They don't want to sell because they have a 3% mortgage, and they don't want a 7 or 8%. But at 5, 5.5, a lot of products are going to come on the market. The other thing that's so important is because the border's closed, and you've had now a couple of million self-deportation, which is so interesting. Those folks were bidding up rental prices. They were bidding up housing prices, and we were paying for a lot of their.
Absolutely, an immigration impact.
So the immigration impact goes away. That opens up markets for more housing, more rental. That'll bring prices down. The mortgage rates will probably come down. You're getting the best of all worlds. He is right about people investing in the United States, and they're building factories. And factories mean what? Factories mean new jobs. Factory means good wages. Factory means more productivity for the economy. That's why I say, even though we haven't seen these numbers in a long time, you could get a 5% GDP next year. I'm telling you.
Well, I hope you're right. I think everybody hopes you're right. And there's certainly a lot of good news in this report. There's no doubt about it. And I think there's a lot legislatively and policy-wise that will kick in, as you say, in that first quarter.
Well, they're going to get
sentiment.
The
and
refunds.
We'll see what the Fed does.
The refunds are. Besson is saying about $150 billion, a couple $1,000s per middle-class family on the refunds. So that's going to be a big help too.
Larry, thank you.
My pleasure.
Good to see you.
My
Merry
pleasure,
Christmas.
Martha.
Always good to be with you. Thank you, sir.
Hey, Sean Hannity here. Hey, click here to subscribe to Fox News YouTube page and catch our hottest interviews and most compelling analysis. You will not get it anywhere else.